Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event. Hello, and welcome back to Earmark. I'm Blake Oliver, your host. Most CPAs work 60 plus hours during tax season. Yuri works 40, and outside of tax season, while others grind 40 plus, he works 10 to 15 hours. And today we're learning how. Welcome to the show, Yuri Kapilovich.
Thanks for having me. Appreciate that. Great intro. Thanks.
Yuri, you call yourself the fun CPA.
I do.
I imagine a lot of that has to do with the time that you've created for yourself in your schedule.
Yeah.
It is the beginning of December as we record. You're getting ready for tax season. Tell me, how many hours are you working?
So yeah, I mean, right now, and obviously it's also tax planning season. So it's a little bit more, a little bit higher than usual than outside of that. But we're talking probably about 10 to 15 hours a week of work, and then social media stuff on the side of that. And the fun, I guess, is the events, social media, and other random stuff that I do.
So 10 to 15 hours of like working on the business. Do you count the social media as part of that? Or is that extra?
It's extra. It's extra. It's the fun part. Yeah. Fun and not fun at the same time. Obviously it's got a lot to it to build the audience, to do the engagement, to talk, to answer comments, and do all that takes up time. Probably if I added that up, you probably add up another 10 at least per week on that.
So I love this so much because most CPAs, we start out in large firms. I only spent a year inside of a large firm, but I think it just takes a year to sort of get the picture. And I did see my colleagues working long hours. I attempted not to. I think I did pretty good, 40, 50 hours when I was at a large firm. But there was so much pressure to work hours, long hours. And there was this culture of grinding. Long hours were sort of, it was like a badge of honor. Did you experience that in public accounting?
Oh yeah. And for me, I've actually jumped. So I've had 7 firms. I jumped 7 firms during my career before going out on my own. And the main reason behind that was really because I was looking for that perfect place to call home, to become a partner, to really do the thing that everybody tells you should do. I realized that doesn't really exist, the perfect place, because everybody is doing exactly what you just described. Every single firm was more or less the same. And the pressure of billable hours is the main thing that every single firm would push you towards. And wearing that as a badge of honor, just like you said, was huge. It'll be like it was sitting there and, you start packing up at 6 o'clock because you want to go home and have dinner with your family. And it's like, oh, packing up early for the day? Is that, half day today? I can't even begin to tell you how many times I've heard that.
Yeah.
Said and this discipline, but that's how it was. And then when you come in the next day, people are like, oh, so you left then, but I left at 1 a.m. Yeah. Like that just did not appeal to me.
Yeah. Yeah. There's that desire to look busy all the time. I would actually, my hack was I would schedule emails in Outlook to go out later at night.
Smart.
So even if I left the office and if I had all my work done, I could like appear busy, but that just seems like so kind of messed up to me. Why do we have to do that? Why do we have to maintain this appearance of looking busy?
It was that. It was pretend to look busy. It was. I distinctly remember. I mean, I remember this like as if it was yesterday. One of my first days when I was at EY, actually, and I was sitting there, and I'm done. Like, I'm telling you, like I was probably not even 6 months in to my career, and I'm sitting there, and I'm going, all right, um, like I'm done. Obviously, I don't have much to do because I'm like a brand new person at this firm. I haven't got much going on. So I'm just gonna wrap up. Somebody was like, "Hey, just like turn on YouTube and just watch some stuff and like look busy because it's gonna make you look better. You're gonna get better work that way." And I just remember, I even then I was like, "Nah." I just packed up and went home. Like I don't have time to just sit around here and waste my time on that. But that's the expectation. Look busy, eat hours, manipulate timesheets. That was my specialty over 12 years in these big firms.
Yeah. Like how
Yeah,
so?
in the sense that as I'm sure you've heard many a times, with the push for raw hours and just showing more and more and more chargeable hours, efficiency is punished, right? So if you're good at what you do and you can get a 10-hour return done in 5, that's bad, you know because even though it's better for metrics for purposes of the realization and blah 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 on the account, but that's not the people looking at your hours. It's the schedulers and the admin partners and all these things, and they're saying, if you were assigned, let's say, 6 returns that were 10 hours each, you're supposed to hit 60 that week, but you did them in 5 hours each, right? Instead of 10 hours each, you did it in 5 hours each. So now you did it half the time. But if you report and you show that 30 hours during busy season, like you would get, emails saying, "What are you doing? You're not hitting hours. What are you doing next week? You get assigned triple the work next week, so you don't do that again." And so when I say manipulating timesheets, I mean you got to get crafty with how you put the hours in, so that you're under the radars. You know,
Right. You
so
want to hit that budget, but not go over it, not go under it.
that's exactly it. So if you
Yeah.
were assigned something for 10 hours, but you did it for 5, well, you're not rewarded certainly for reflecting the correct hours. So you got to put in whatever you need to put in so that you stay off the radars.
Mm.
And that maybe not what everybody wants to hear, but that's the truth.
Yeah. Yeah. That was probably the most frustrating aspect for me as well, was if I got more efficient, my hours went down. I
Exactly.
individually didn't look as productive. And so I didn't have an incentive. And I think there's something about you, Yuri, that doesn't like that either. Right. And even though we play that game, we don't
Yep.
like how it feels. And that is what I think pushes a lot of high performers out of public accounting and larger firms, is that we feel like we can't get ahead. If we do a great job, we just get more and more and more work, more clients, more returns,
Yeah.
whatever it is, right?
Yeah.
Yeah.
Honestly, one of my most frustrating experiences, aside from what I just described with the hours, was actually when you're a high performer and you do well and are efficient and everybody likes you. Instead of asking you, like, or me, Yuri, hey, what do you want to work on? Like, what do you love working on and what gets you going? For me, it was small business, by the way. Instead of that, it's, hey, we are going to assign you to the highest profile clients so that you can further your career. And and this was not just in one firm, this was in multiple firms. Instead of listening to what the people want and being like what drives them, it's like, oh, you're good, so you must want to do the $300 million business with 50 state returns and complexity. Like, no, I didn't want to do, I don't want to have none of that. I wanted to work on 50 million and below, which I always was vocal about. As you can imagine, I'm not a quiet person. And I would be vocal about that, and I would say, hey, I want to work on those accounts. I don't want to work on the 300 million because that's not small business to me. You're never talking to the owners of a $300 million company. You're not. You're talking to a VP of tax or whatever it was. What drove me was talking to the owners, being involved enough, being seen as a advisor, a true advisor. But unfortunately, those kind of clients in the bigger firms were like, no, you don't need to work on that. That's beneath you, which was sad to me.
Interesting. So you now own your own practice. You can set your own hours. You've set yourself up this way: 10, 15 hours outside of tax season, No more
Yep.
than 40 during. Um, what was the breaking point for you in public? When did you decide I need to go out on my own, and why?
That's a great question. When I go back, I don't think that necessarily was a breaking point per se, like a particular moment where I said, "That's it, I'm done." It was more so the culmination of the fact that I've been at 7 firms looking for the perfect one, and every single firm ended up looking like this. The first 6 months was a honeymoon phase, and I was like, "This is it. Oh, I love this place. Like, everybody is great. I'm getting the clients that I want." Everything. The next 6 months were like, okay, like I don't really like this. I don't like that. I don't like that. And then in the last 6 months were just me being miserable, unhappy, frustrated, and butting heads with partners left and right because, they didn't like that I was pushing, and making waves. Right. And the reason I actually left in the first, like initially, and the reason why I really started my firm was because an opportunity came to me that was just so unique to me. And I thought this was it. This is the reason I'm going to go. So basically, a friend of mine selling off $100,000 worth of his practice to me, so that and I was like, this is perfect. Like I was making $150,000 at the time, so I was thinking, I'm like, I'll make 100,000 in my first year. Like this is comfortable enough. Plus a little bit of work on the side, we'll be okay. So that was the reason why I gave notice. And unfortunately, 5 days after I gave notice, that friend of mine, the guy who was selling the practice, got sued by his partner because he was essentially not allowed to sell any of those clients. They did not belong to him technically. We didn't have anything in writing. We didn't have anything like that. It was kind of like a word of mouth thing. I was like, yeah, this is cool. And yeah, I learned my lesson real quick on that one. So 5 days after I give notice, it's I immediately get the notification saying, hey, but it's not going to happen. So then I got a choice to make. In the next 2 weeks, am I going to kind of tuck the tail and say, hey, never mind, guys, I'm coming right back. I'm not quitting. Or do I go with let's try to figure it out and see what happens. So I went the second route. And to do that, without freaking out, because I'm a pretty like risk averse person, even though you may not be able to tell sometimes.
Yeah,
but
most of us are, right? That's where we're
we are.
CPAs.
Exactly.
Right?
CPAs, risk averse. That's what we do. So we manage that risk. I was like, the only thing I know is I got 10 years plus of experience in public accounting. Let me leverage that and contract somewhere.
So you overcame that fear. How did you do that? I mean, that is a big deal to leave your job making 150K.
Yeah.
Were you the sole breadwinner in your family?
So my wife also worked, but we also had a kid. My son was 3 years old at the time.
Yeah.
And, health insurance, all the things that we all like to call the golden handcuffs truly are golden handcuffs. But the biggest one is the insurance. That health insurance, man, it is scary. It is scary, expensive when you're on your own. And certainly one of the biggest preventers from folks to go out on their own. But yeah, absolutely a very scary leap.
So how did you overcome that fear? What did you think? You thought about withdrawing your resignation, and I'm sure the firm would have taken you back.
Yeah.
What kept you going?
Two things. The primary thing that kept me going was my very, very firm belief in never going back on an offer. So never reneging your notice. So, I've seen this happen time and time again when people across the 7 firms I've been at would give notice, the firm would convince them to stay or whatever it is. And then they would stay. And then when they would stay and they would kind of come back, it was miserable. It was extra miserable because the firm was kind of like, hey, we own you and whatever it was. So that was one aspect. I didn't want to do that. I didn't necessarily want to just tuck my tail and come back.
Yeah, it's generally considered a bad idea. Like if
it is.
Don't.
Yeah.
Yeah, accepting the counter offer to stay. Most of the time, it doesn't work out. You end up leaving anyway later.
Exactly, and I've seen it happen time and time again. In exactly that position, you ended up, leaving anyway when much more unhappy than the first time around. You're better off leaving, going to wherever you were going to go, and then possibly coming back down the line rather than reneging on the spot. And plus, you burn the bridge with the other person. Anyway, I digress. But the other piece of it was I knew that I want to give it a go. And I knew that I had that marketable skill of, at the time, again, 12 years, public accounting, a manager, experience with people making 180, $100 million a year in income, all that. I knew I could be marketable somewhere. So I started reaching out. I started reaching out on LinkedIn. I started reaching out to friends, and I got a like a part-time gig, basically, as a contractor in the city, in Manhattan. Took the bus basically 2 or 3 times a week to go over there and helped out working on smaller tax returns. I enjoyed that, but the commute was a little bit killer, going to get the kid from daycare, coordinating all that. So then I found another contracting role with a firm here in New Jersey, also 2 to 3 days a week. And since then, again, not intentional, but since then, that has been my advice to anybody that's looking to go out on their own, which is try to find a contracting gig, because those 2 to 3 days will keep the lights on while you build your firm the way you want to with the other 3 or 2 days.
Yeah, that makes a lot of sense. And then you transition, you gradually build up your own book of business, you get comfortable,
Yep.
you feel confident, and then, well, now you've got your own firm. You
Yep.
don't have to do that contracting anymore. How long did that process take to get from full-time employment to full-time owner of your own firm?
Yeah, without contracting.
Right.
I would say about a year and a half. Yeah,
Okay,
a year
that's not
to a year
bad.
and a half. No,
Yeah.
and I could have ended it beforehand, the contracting role, and eased off. But I was just helping them out. We were helping each other out. It was kind of a good relationship. I was working with some good people at that place. So I figured, what, let's keep it going. It was probably giving me between four in the off seasons, 4,000 a month. In the busy season, it was eight to $9,000 a month. So I mean, again, to the point of before, and you can control that yourself, right? You want to work a little more, you want to work a little less. It's truly flexible in that regard. And as you're building your own firm in the way that you want, it allows you to focus on what the dream firm that you want for yourself to be, instead of what I'm sure we're going to jump into later, instead of taking any and everything at whatever somebody's willing to pay you. And that to me is important.
Yeah, that's super important. Being able to take on the right clients, not taking every dollar that comes in the door, is really important. If you want to build that lifestyle firm, if you want to build a practice that gives you freedom. Absolutely. I want to welcome our live stream viewers. Thanks for joining us. Jagendra, great to see you here. If you are attending live, watching us on YouTube or on LinkedIn or wherever, go ahead and ask your questions to Yuri. I will highlight the comments and we'll get your questions answered. I think there's a ton that we can learn from Yuri about building a firm and building something that is sustainable.
Yeah. Side note, that's the crazy thing for me, by the way, to just be here, like in general, as building the LinkedIn presence has created this world where people ask me questions. People, it's crazy. And being an advisor to folks as they build their own firms.
Well, it's been great getting to know you online.
Likewise.
We haven't met in person yet, right?
Not
yet. We will eventually.
We should, though. Yes, we got
it. It's funny. I forget, who I've actually met in person and not.
I feel you.
But you're the reason we got to know each other is because you are active on social media. Not a lot of CPAs are. It's a pretty small group, and you've been really generous with sharing your story and your advice. And I just love that you share the fun you have, that hey, I can be a tax CPA and I can go out and I can work out every day. I can go out on my boat. I can host awesome networking events, and you love to put those together and do those. And it's so much fun to just watch a fellow CPA having fun. I feel like we don't have enough fun in our profession.
No, we don't. It's true. It's really what's missing. And the fun CPA, by the way, never, again, much like anything else that I do, nothing is intentional. It really is not. And the fun CPA was a hashtag that I just started typing randomly into my posts, like probably about 2.5 years ago, while posting. I just wrote the fun CPA. I was maybe on my bike or something like that. And yeah, I mean, it became a differentiator. And I knew I was onto something when I went to my first like little conference thing. It was a like rich people with their like expensive toys. So it was like private helicopters, private jets, things of that nature. And then I literally reached out to the guy who organized this. I said, hey, can I have a booth at this place? He's like, what do you do? I'm like, I'm a CPA. He was like, we have literally never had a CPA offer to be in this. So sure. He's like, usually we charge 5,000. I was like, you know, how much would you charge me? He goes, how about 500? I was like, let's go. You know, like, so I set it up. I got a sign printed that said the fun CPA, hashtag the fun CPA. And I knew I was on something because nobody could process that. Like literally people walking by and they're going, the funk pa, the fun, the what? Like they couldn't put that together.
Right.
And when somebody can't put that together, that's a good thing to do.
And you've really leaned into this. I mean, on your website, thefuncpa.go,
Yes.
you got it there. Hashtag the fun CPA.
Yep.
High net worth strategies for small business owners. Your fun small business owner advisor.
Yes.
I mean, this must be working for you. Clients.
Yeah.
Clients like it.
Clients like it. And I think again, inadvertently, with the content, with seeing me on things on shows like this, on networking events, whether my clients go to them or not, they sometimes do. But whether I go to them or not, I think there's a level of pride on the client side to say like, hey, that's my accountant. And everybody's like, that's an accountant? Like that, like, what do you mean? Like, you know, well, I'll tell people that I organize events. And the first question is like, what do you get out of them? You know, and I've been asked this a ton of times. Like, you know, I'll organize an event. I usually come out of pocket. At this point, I've had about 4 events, and I came out of pocket just shy of $10,000 in total across all of them. And people are like, "So what is your goal of this? You know, what are you aiming to do here with your events?" And I'm like, I have no goal. I literally am here to put these people together so they can interact amongst each other and do business together. I'm just here in the background. Now, obviously, that does eventually lead to some clients. But that's the goal of that. Just have fun, do networking in a different way, do accounting in a different way where we're talking first. You know, this is not a transaction, you know, and I think that's really what it all translates to.
Mm-hmm.
When I talk to some people about the brand, it's, you know, that's really what it comes down to.
Yeah. People don't want to be sold to. They just want to develop relationships. We like to work with people we like. And so if you approach it from the standpoint of, I'm just going to get to know local entrepreneurs, business owners, have a good time, the work will come.
Yeah. 100%. 100%. The work will come. And I see Lucas in there. Appreciate
you. Hey, Lucas, thanks
Hey.
for joining us. Lucas says, accounting is fun. I love your posts, Yuri. Yuri.
Yes.
Would you stand up and
move
100%. Around and show us your shirt?
Let me move this thing out of the way for a second. Lucas, shout out to you. Straight out of public accounting.
Yuri's shirt.
With my shirt.
Yuri's shirt says straight out of public accounting.
Yes.
I love that shirt. And you got that off of was that Lucas's
accounting couture. Accounting awesome. Couture drapes me in the best of accounting jokes. But yeah, this one gets a lot of views at the gym. Actually, I love wearing this one to the gym. And
yeah, Jenna says, I love that shirt.
Yeah, it's hilarious. And the people are like, what is that? What is that? Come on, shut up, public accounting, especially people that I could see at the gym that are at firms. Because we all know if you've been in accounting for a certain amount of time, I know you got that swag. You know, I know you got that, you know, firm swag, sweatshirts and all that. So I see him wearing like, you know, EY, KPMG, Deloitte. I see him looking at me too. So, you know, yeah, definitely a great shirt. People
in our live stream are loving the shirt. Yeah, go get that at Accounting Couture.
Yes, pick it up. Yeah, pick it up. You can go reach out to Lucas too.
Yep. So have you lost any clients because of your fun CPA approach, Yuri?
Ooh, interesting question. I have certainly lost clients. That whether I blasted them out myself, or I lost them because, you know, we didn't line up, we weren't a good fit. Did I lose them because of the fun CPA? I don't think so. And those that would have possibly left because of they're not down with the fun CPA, probably don't want to work with them anyway.
Right.
So it kind of builds this almost community, if you will, of folks that lead with fun, lead with a good time and business later, which is who I enjoy working with. And then that also translates to them understanding the value of our relationship.
So I know everybody is interested to know how you built a practice that lets you work the 10 to 15 hours during non-tax season, keep it to 40 during tax season. Because that's really, really hard to do. I do not meet many CPAs who run their own firms that can claim that. The ones who do work fewer hours outside of tax season tend to just do a ton of hours during tax season. It's a lot.
Yeah.
They are burning the midnight oil for months.
Yeah.
And I can kind of see the appeal of it, but also like I've worked in seasonal businesses outside of accounting, and I've done that grind, and it's like brutal. It takes you out of your routine. You forget how to like go work out. You know, you miss your family for like 100 days straight. So let's talk about like how you actually designed your firm to do this.
Sure.
Tell me about what you did that's different than a traditional firm.
Yeah. So I'm going to start it again by saying the same thing that I've been saying, which is nothing that I do is intentional, right? I didn't intend to build this lifestyle firm necessarily. All I knew at the time is that I just wanted to have my freedom to do whatever I want. Like I didn't know how to get there. So it's not like I had this blueprint of this is what I'm going to do to get to working less than 40 hours a week during tax season and to having great clients and all of that. So it kind of evolved over the time. And the other thing that really got me over the years and you know really kind of hit me in the emotional like kind of feelings is when I was at the bigger firms, the amount of times that I would see folks just put their lives on hold for 4 freaking months at the beginning of the year, and then for 2 or a month and a half to, you know, in the fall would kill me inside it. And to the point where people were planning babies around tax season. That's insane. I mean, I've literally heard, and I've heard them so verbatim, like somebody was saying, like, if my baby is born during tax season, like, I don't know what I'm going to do.
Yeah.
I'm like, that's crazy. It's hard enough to, you know, have a baby, period, you know, let alone
I mean,
try to, you know,
that's what I've heard from the dads, right? Like, imagine if you're actually giving birth, like how does it even work? It's not even compatible, right?
God, you know, so God bless the women that are in the profession, and it is not easy, you know. I mean, and I feel for them, and people would miss their birthdays. By the way, my birthday is April 11th. I haven't missed a single birthday in any of the years, and I left at 5:00 on my birthday, on April 11th at every single firm. So you can imagine the looks I would get. But I don't care, you know. But the point is to go back to your question, because it digressed a little bit. How did I build the firm? How did we get here?
Yeah.
So obviously,
so it wasn't on purpose. You didn't set out to say I'm going to build a firm like this.
I didn't set out. Yeah, I didn't set out in a particular list of steps that I knew in my mind would somehow get me here. It was more so.
Well, you were selective, right? You were selective with the clients you took on.
Yes. So where I was, and the reason I was able to be selective is because I had the contracting role. So contracting role first, which gave me the 4,000 to 9,000 a month, depending on, you know, depending on how the month shook out. You know, and the amount of work that I was doing, whether it was busy season or off busy season. So I had that comfort level. That's great. I had a good amount of savings saved up. Also great mentally. Then I started being selective. I always wanted to be selective. Always wanted to work with business owners primarily. And I started actually at about 800 as a minimum fee. I said, you know what? Like, I don't care because I'm making $4,000 to $9,000 a month. Anyway, if you don't want to be my client, we're good. You know? So I think the answer to your question of what's the difference between how I set it up versus your traditional, most people's thinking is take on any and everybody that's willing to work with you at whatever fee, you know, you like they're willing to pay. Now, here's the problem with that. And I do this math all the time. Let's just say you've created a firm, you know, and you're doing, you know, you're charging $300 per tax return, right? Let's just say. And you got
which unfortunately is, when you look at the surveys, is what a lot of taxpayers are charging for an individual return. It's very 100%. Low.
It is very low. But you know what? Let's even go a little higher. Let's say you're more ambitious. So you've charged 300. I mean, sorry, you charge $500 a tax return.
Okay.
You got 300 clients, right? That's not bad. It's a pretty good place to start. You've taken on a bunch of people. You quit your firm. You started hustling, and you got 300 clients at $500 a piece. That's $150,000 that you're about to make in your first tax season. Great in general, right? But here's the problem: 300 clients, and I don't care what anybody tells me, you're not doing a return in 15 minutes, even though that's what people will tell me. I said, you won't. Why? Because you need to collect the data, send out organizers, or send out something that's going to tell people what to give you, answer a million questions about whether this W-2 was right or it is the 1099 you're seeking, and you're answering questions. So you're drowning in that admin aspect work until you've collected everything. Now, when you've collected everything, yes, you can probably get that return done in 15 to 30 minutes. Self-review, get it out the door, collect signatures, and answer a bunch of questions on the tail end. 1 hour. I'm going to just go ahead. At least, but let's just say 1 hour. Now you're talking 300 clients, 1 hour each. That's 300 hours. But guess what? Information in our world, tax world, is not coming in until at least, at best case scenario, early February, most likely mid-February. So let's call it February 15th. So you're talking February 15th to April 15th. You got 8 weeks. So you take 300 divided by 8, and you're talking about 37 and a half hours a week. That's not bad, right? But that's best case scenario.
That's best case.
And that's not how it works.
Yeah. In real life, you're going to be spending way more than 1 hour per client, because
way more. You're going to have.
I mean, if you have to meet with the client, add another hour.
Yep.
If you have to drive around, which a lot of people do, then you got to add in that time. I think we just totally underestimate the admin and and then there's just the time it took to get those clients in the first place, to have all the prospect meetings.
Prospect meetings, engagement letters, onboarding, and all that. Right. That's a good set. That's my example here is a best case scenario, but realistically, you're not even getting the information by February 15th. You're probably going to get it closer to March. So you're really tightening up. And that's the reason why everybody's got that crazy crunch. So from my perspective, and just to give context to everybody, I got about 100 clients right now. 100 clients, high value. So I started to go back to what I was saying, I started at an $800 minimum. I said, whoever's willing to take me on, let's go. As time grew, and I've made relationships with some folks, and people gave me good advice, or they gave me good referrals. Some of my own clients, a lot of word of mouth growth. I'm still not on Google. I'm all word of mouth primarily, and LinkedIn, networking with other folks like financial planners. Shout out Mondo, and Joe Stabile, and a few others out there that are always a bit in my corner, referring me high quality folks that they work with. So that's what LinkedIn also did for me. But then as time moved on, my fee started going higher and higher, and right now I'm at a minimum of $2,000 for any return. So here's how the conversation typically goes with a new prospect client that's looking for your 300 to 500, cheaper, returns, from a price perspective, and they're price hunting. Here's what happens. They're going to come, they call me up, or, they reach out. Hey, Yuri, I was kind of saw your content or saw this or saw that, and I'm really interested to work with you. Are you taking on clients like me? And I'll say, hey, are you a business owner? And they'll say, no, I have a W-2 only. I'm like, listen, I'm happy to work with you. W-2 only. That is totally fine. I have a few clients like that too. My minimum fee is $2,000. And I stop. And then they'll say, oh, wait, $2,000 for my return? My return is very simple. What do you mean $2,000? What? And there's that little hesitation. And I'm like, yeah, look, I focus on business owners, I add value. And quite frankly, with a W-2 only, there's not that much value that I could add to you. Happy to refer you out to someone else. That piece of it is the difference between a lot of people's mentality, because some people's mentality is, but it's $500 that I could do in 15 or 30 minutes. That's what I hear all the time. It's just easy money. It's easy work. But don't forget my math.
And they're not considering the opportunity cost, because every $500 return you take is a $2,000 return you're not taking, potentially.
Yep, exactly. And and I could miss, to that math. I'm not great at math, obviously. I'm an accountant, but I
saw
math,
you've got Excel open, right? You're doing it.
I'm doing a calculator, but I got $500, and you can miss 4 clients, 4 prospects you can miss at $500 a piece and land a $2,000 one. And guess what? You just quartered or, 1/4 your work, right? Load. So the other challenge, and I'll just finish up with this. The other challenge that happens is if you've already built a firm that's got a lot of volume, but you want to get to the value aspect, you want to get to the value creation and charge more, it is extremely difficult to just all of a sudden be like, yo, by the way, so I know I was charging you 500. Yeah, it's 1,000 now.
Yeah,
that doesn't
feel good.
It doesn't feel good. And now you're not only going to lose, you're going to lose, not only lose the client, but you're going to lose the reputation. You're going to lose, the street cred, because they're going to go to their friends and say, nah, don't use him. Like, he just doubled my fee out of nowhere.
Yeah. Andrew says Yuri's advice on his minimum fee for new clients is great advice. And I think people can benefit from hearing how he approaches these conversations. Thanks.
Appreciate that, Andrew. Thank you.
I agree, Andrew. The hardest thing is to raise your fees when you've lowballed to begin with. Yeah. So having the courage to hold that line, give your high price.
Yeah.
Even if you have a range, to price it ideally for you to begin with, and then just not say anything, like what you did, Yuri. You say the fee, and you wait for the reaction, and you don't negotiate against yourself.
Nope.
That's really, really hard.
Yeah. And I want to add one more thing about the brand, the Fun CPA, and what it also does, posting on social media and doing networking events. I've heard this before, and it didn't translate to me until somebody told me this. And they said, Yuri, one of the biggest challenges that I have with my current accountant, let's just say, is that what is it? Everybody knows what? They're unreachable, right?
Yes.
That is one of the biggest things. I can't get a hold of my accountant. I've been emailing them for months on end, and I can't get a hold of them because of my math over there, of all those returns that they're cranking out, and they're just done afterwards, and it's hard to get a hold of them. Multiply one question by 500, you got a bunch of questions.
Yeah.
Now, for me, what happens is what somebody has told me is they're like, we see your content. We see you're doing networking events. We see you're at the gym. We see you doing this. And the first thing is he's available. And I am. I have 100 clients. They can text me anytime, even if I'm at the gym, when I'm here and I'm calling. This day I had a call with somebody while I was on the little elliptical thing, like I got time.
You can do it. You can be responsive. How quickly do you get back to your clients?
I mean, I tell my clients, just text me, please. Like, obviously email, text, whatever. But text
that's very controversial, Yuri. Like, I have heard many people say, never give out your phone number to clients. But I can see how you can do that because you have a very select client list. You don't have to worry about them blowing up your phone all the time, all hours of the day.
Do you know what happens when, like, as the price went up and as you're dealing with somebody who's seeing your value, you know what goes down? The number of questions, the number of bothers. Like now, I'm just saying, again, nothing is intentional, right? Like, I'm just seeing that happen. When I would have a 300, when I first started, I did do that kind of, like, especially when it was on the side or family and friends with it, $400, a tax return, $500 tax return. Those smaller tax returns would give me more strife and headache than a $2,000 tax return or a $10,000 tax return. And people, I have my most client that pays me the most amount of money for the year. They're just shy of $25,000 for the year. They when they message me, it's like, hey, I'm really sorry to bother you. In my mind, I'm like, you're sorry to bother me? Like, we're good, man. Like, don't worry about it. You're not bothering me. Like, this is what I'm here for. But the point being is, like, for me, it just started translating into that, and I was like, this is great. A $2,000 client feels the value you're providing to them and will probably ask you less questions. But what I also layer on is I have a quarterly package, and I have a monthly package, and I have a tax-only package. And so by doing quarterly, this is one of my biggest sells with the quarterly. We're forcing that conversation quarterly. We're forcing interacting quarterly. It doesn't take up that much of my time per se, because it's scheduled and whatever. And then, they're getting the value. They're having, a consistent meeting.
What is included in the quarterly package?
So in the quarterly package, it is obviously tax return prep. for the business and personal returns. And then it's basically just 4 quarterly, about 1 hour discussions.
Planning meetings,
Yeah, planning
estimated
meetings. To be
tax.
honest, you know what's funny? When people will sign up for that, and I don't know, maybe they expect something, but really, we're just chatting for an hour. And I've learned, like, over my 12 years, and now, I mean, at this point, 14 years in public, like, people just want to chat. And while you're chatting, we got issues that come up. So sometimes when we force that conversation on a quarterly basis, yes, I'm telling them roughly what their tax is going to be. I'm telling them what the estimated payment is going to be. But by us chatting, we can learn something else. Maybe they decided to open up a new business. Like, how many times have I learned of something in my prior experiences, learned of something my client did in April of the following year? But you had no idea they did that. But by forcing those conversations, you're forcing that discussion. You're able to also raise your fees higher. Those, by the way, start at $1,500 a quarter. And typically they'll include, obviously they'll include the tax return prep, and I try to figure out what those conversations are worth, so to speak.
Alex asked my next question, which is, and I think I know the answer to this: do you have any staff, or do you do this all solo?
I do it all solo, pretty much, mostly, but I do outsource locally, not overseas. Here in Brooklyn, I outsource my bookkeeping.
Got it. So you are offering bookkeeping to the clients. Is that the monthly package?
Yeah, correct. Yep. The monthly package is the one that does what I call the full service, whatever you want to call it, white glove full service, where it's still quarterly, by the way. So the key to me is to keep the quarterly meetings. Like, just because you're paying me monthly doesn't mean that we're going to be chatting monthly. So I set up the expectation in that way so that I'm not bothered on a monthly basis. Obviously, if there's a question and we need to discuss something, you have a question, it's really just free flowing. But what's the word I'm thinking of? The deliverable, so to speak, is the quarterly meetups to discuss said things, the ability to reach me more or less anytime, but again, most people don't. And then the actual tax returns.
The beauty of having 100 clients is that you can do this yourself. You don't have to have staff, partners, and I feel like that is really important when you're building your firm to decide.
Yeah.
To know, am I going to build a solo practice, or am I going to build a practice with a team? Because if you have the solo practice, you really need to be picky about the clients. You need to keep the list low. You need to keep your capacity high. And if you're building a team, it's different. You could take on those $500 returns if you have built the team, but that takes a lot of time to manage. At least half of your time, if not more, is going to be just managing people and processes and workflow, and it adds this huge layer of complexity.
Huge.
So,
2 points, two things on that. I was just talking to somebody just about this via text. One of my OG followers from day one. You know who you are if you're watching this. We were chatting about these exact two options, and I think, sometimes I may come off as like, and I don't want to come off as value as the way that I've set it up is the only way or anything like that. There's plenty of folks doing very well with the more volume-based $500 to $700 tax returns. The processes have to be in place, and yes, the staff have to be in place, and your systems have to be in place to do that. And I think you can do very well in doing that, whether that's overseas, however you structure that. I think you can make it work. I think the problem is this is what we're talking with this person, is if God forbid one of your top guys or girls leaves, because people quit, people leave, you got to pick that right back up, and you're doing triple the work now to catch up, to know what they did last time. You're not disconnect. It is not a passive thing. You're involved. You're involved day in and day out, and sometimes working more than these people on making sure that they got work.
And that's why the most difficult phase of building a larger firm is when you go from 1 to 10. Until you have 10 people on your team, you, as the owner, are the one picking up the pieces when things fall apart, which is going to happen because turnover in our profession is as high as 20%.
Yeah.
And, even if you create a great environment for your team, there's a chance you're going to lose one team member every year.
Yeah.
Like, that is just a given. You should just assume that you're going to lose somebody to another firm or to going off on their own, right?
100%.
So that is the hard part.
And I'm at this point, to be perfectly honest, in my firm, where I'm toying with the idea of bringing someone on. And my approach and my goal in this point, where I've built the firm thus far, is if I do bring someone on, they're not working more than 40 hours a week. Just like I'm not working less than, just like I'm not working more than 40 hours a week. Whoever's working for me is not gonna be working more than I am. And that's the firm I want to build. So I'm in this, who came first, chicken or the egg situation, where I want to build a firm that, and get to a point where I'm comfortable enough to say, okay, I got enough work here to give someone and take everything off myself. But when I'm working 35 hours to 40 hours during tax season, I'm like, should I do it? Because
it's a tough choice. Yeah.
Because I'm not working that much. So but it is this point now where it's getting there. Go ahead.
Is that because you want to increase your income? Russell asks, and feel free to decline to answer. Russell asks, Yuri, you've shared how you were doing financially earlier on, making about $150K.
Yep.
Are you comfortable sharing your current income?
Yeah. I was actually just about to say it before. So I'm gonna be this year. I'm probably gonna close out just about 225. Probably be right on, depending on how things come out. Maybe 250. Depending on how it play out in the next couple of weeks. But my goal is, and again, I'm comfortable. People ask me all the time. They'll say, hey, you're looking to get more clients. Are you looking to bring on? I'm looking to bring on good fit clients anytime. I'll figure it out if I get too busy. That's an easy problem to solve for me. But yeah, it's certainly amazing to be in this position, and obviously overhead costs, all that. I'm at home all the time, which is good and bad. So my costs are fairly low. But that's where I'm at.
Yeah. So that's interesting. Thank you for sharing that. I think it's very enlightening. And I want to play devil's advocate. So
Hit me.
Your typical mid-sized accounting firm partner, on average, and I'm sure there's a huge range, of course, within the partner groups as you go from junior to senior. But I have read, according to Inside Public Accounting, that the average partner is making like $800,000 a year at a top 400 firm.
Fair.
That might actually be top 100 outside of the big four, though, just excluding them.
Okay.
So you can make a lot of money if you get to partner in a traditional firm.
Yeah.
Why not?
Why not do it? Why not here? So it's a really good question. And believe me, when I say this again, I'm a big proponent of being on your own. I'm a big fan, right, of going out on your own, but it's not for everyone. And I'm also very big on making sure that I say that, if you're 85% happy at your job right now, going out on your own is not going to give you that 15%. It's actually might take away 30%. That's my one key to make. Now, to do that, look, I could have stayed at UI. I could have stayed at any one of the firms that I was at, and probably would have been doing really well, $700,000, $800,000 salary. My problem is that, I would look at who is above me, right? I would look at what I'm going to become. That's what I would do as a younger staff. I'm looking at these partners who are in the office more than I am. I'm leaving and they're still there, which obviously was looked at, very much frowned upon, but I just didn't care. But, they're looking at me leaving, but I'm looking at them too. And I'm saying, all right, those guys like 10 years older than me, they're partner. That's nice. That salary is nice, but they're here and they have a boss just like I have a boss. And so where is in my mind, if I can make $800,000 and work 10 to 2, I would have stayed.
Right.
10 a.m. to 2 p.m.
I don't know any partners that do that.
Nobody has flexibility. Yeah. And most of them are staying past the other ones. Most of them, which also another thing that kind of hits me too, is have canceled vacations. I have seen it.
Yeah.
They have canceled vacations to work. They're working on vacation. I got 2 kids, man. My youngest, my oldest is just turned 6, and my youngest is about to turn 2. That's not even an
Not
option.
worth it. Yeah,
No.
I did a similar calculation where I said, I don't know if I intentionally did this,
Yeah.
and but I saw how hard everybody above me in the firm was working. I was a manager when I left,
Mm.
and I said, I had a young kid as well, a
Yeah.
son, and I think he was 4 or 5 at the time, maybe younger. And I said, I made a determination. I value my time more than the money. And I suppose it's easier to do that if you just don't expand your spending to match your income, right?
Yes. Yes.
That
Lifestyle piece.
helps a lot, right?
Yeah, it does.
I mean, you can. I don't know. I always found it strange. Like I wonder, like, what do you do with that salary when you're working, an average of 55 hours a week year round, and you cancel vacations? I mean, it's nice to have it, but I don't know if I'd have the time to spend it.
I mean,
Or
look,
know.
I've it takes me back to my memories of the bigger firms and dealing with some of these issues of these people. Client sold his business for $200 million. And after everything was going to net about 75 million or 80 million or so. And he was on the younger side. I think he was around 50. And he's like, how long is this money going to last me? So, we say, what are your expenses? Clothing alone was $1.2 million a year, every single year. So yeah, that money, when we calculated, by the way, he required a Rolls Royce every year, new. So yeah, look, if I say required, that's what his
That's what he
spending,
wanted.
that's what he was doing when he was making $20 million, $30 million a year. My point being is, there is, no cap to how much you can spend. You can spend a boatload of money, every year, every week, if you wanted to. I can easily spend $800,000 a week if I wanted to, but
I'll help you do it.
Yeah, we could do it together. We can just throw the craziest events. but the point is, yeah, I mean, but by the way, the short end of that answer was about 5 years was how long that money was going to last.
Wow.
Still, it was 55. So
I feel like I could live on, how much money was it?
Like 75, 80, I think, something like that was the net after, everything.
Gosh.
Yeah.
I could easily live on that the rest of my life.
Me too.
I mean, it's all about, it's about like, yeah, what do you really need to be happy? I feel like we don't ask ourselves that question enough in the profession. It's it goes back to this billable hours thing, right?
Yeah.
And it's all like top line, which to me is crazy that we value in accounting. We focus so much on inputs like billable hours and top line revenue, dollars in the door. And yet, what is the most important number in accounting?
Yeah. The net.
It's your net.
Yeah.
Your net income, your profit is what we learn how to calculate. That's the entire point of accounting, is to calculate profit.
Yeah.
But we don't seem to do that when we look at our careers, because
we don't do that when it comes to our careers. Partners drove me mad in all these firms that I would leave because of this principle. I mean, the classic example was, I obviously will not name the firm, but I'm sitting there as a manager, and I get a proposal. Hey, we got a new firm, we got a new client in the door. This is amazing. Really great opportunity. We're going to give it to you because you're amazing. And obviously, when you're amazing, all you get is just more work, and quite frankly, not the most enjoying work. So I'm looking at this client. All right, I'm looking at it. $250 million revenue, 50 states, and a massive sale, reorg. Which is wildly complicated sale, that was all structured, everything. To do that return easily took the team about 75 hours or so, 100, maybe even more than that. I don't remember anymore. National tax got involved, everything. $15,000 fee. That return should have been $150,000. But that goes to the point of, the partners on the job are rewarded by top line revenue and what they bring in. Their book of business isn't net. Their book of business is gross. And so, but the hardest thing about accounting and what we do, when you look at the billable hours model, which is trash, but the biggest thing about it is that there is no cost. Like, when you tell me that as a manager, I'm billed out at $485 or $500 an hour to the client, that you then discount 70% of standard right off the bat, and then you adjust it down if the hours are too much because you have a flat fee. So it doesn't really matter. So there's no like actual cost. The costs are basically just fixed. My salary, the rent, and maybe a few other things in there. That's where I think a lot of partners kind of get hung up on the top line revenue only, because really my hour doesn't cost anybody $500.
You're a fixed cost.
I'm a fixed cost. My fixed cost is my $150 salary, and you're just trying to grind me out, to work more so you can bill out more, but really just keep me busy enough to make my $150,000 worthwhile. That's it.
Yeah.
And that, nobody's spending $500 on my cost. That's not my cost.
That was the biggest revelation for me, was when I realized that the all these metrics of like realization, utilization are imaginary.
Oh, it's so imaginary.
They don't exist.
It's made up.
It's industrial cost accounting applied to people.
Yeah.
Which doesn't I'm not going to say it doesn't make sense, because it is better than nothing. But
sure.
And it also made more sense when we had less automation. But it's really like not what we care about. What we care about in the end is what is the profit of our firm, and we also don't even consider the non-financial metrics, right? Like the work-life balance. Like how happy are we?
I think, 100%.
How much time do we spend with our families? How much time do we have for our hobbies? Or we didn't even get into it, but like you spend a good amount of time on a boat in the summertime, right?
Yeah, so, I rent it for the record. It's not mine.
Well, see, that's the smart thing to do.
Yes.
All right. Why buy something when you can rent it?
Yeah, they got these cool concepts. I mean, they got them throughout, but it's like these boat clubs, and you basically just pay monthly, and you get to take them out.
Yeah,
more or less.
Brilliant.
Whenever.
No commitment, right?
No commitment, and I'll do networking events on them. We have the most amount of fun on those, and we go out on the boat. And my summers, man, I mean, my friends make fun of me, and it's partially true. Like I don't really work. That's the ongoing joke. Now, granted, like there's admin stuff, there's all the stuff that I do, but I mean, especially in the summertime, it's like 2 to 3 hours a day at most, and we can do it from anywhere. But yeah, I think as a profession, we need to refocus, and especially if we want to fix this pipeline problem that we all keep talking about, that has been just basically old school partners that won't give up the ways that they've been doing things for years. The way we fix that is by focusing on the people, your number one asset. This is what used to frustrate me to no end. It is as if everybody forgot that your asset in an accounting firm, in these big firms that I've used to work at, is not your clients. Their clients are important, but your staff are number one. And when you neglect that, when you forget that, and you just grind them for hours, billable hours that mean absolutely nothing, it is of no surprise to me that people are leaving.
No surprise that we have a issue getting young people to want to work in our profession.
Yeah.
Like seems completely obvious, but I guess that's because you and I went through it and we saw it and we rejected it.
But there is an upside. Yeah.
Before we go, Yuri, we got a few questions I just want to hit on.
Sure.
And feel free to just give a quick answer. Penny asks, do you find navigating reciprocity issues is a hurdle when taking on clients located in other states?
Nope. No, there's no issues there.
Yeah. Marta wants to know, what advice can you give for a new grad with a BBA in accounting, starting an MS in taxation and on track to CPA?
Nice.
I didn't have any internships. However, I have experience working as a billing coordinator / accounts receivable specialist in healthcare, trying to find an internship in a corporate setting, but it seems I'm overqualified. But associate positions are looking for experience. It's frustrating.
Yeah, that is frustrating. Let me just read that up. Are you able to put that back up?
Sorry. I'll put it back up for you.
Yeah.
So I guess the question is like, like how do you get into accounting when you don't have experience, right?
Yeah.
It seems everyone wants experience.
Yes. So what I will tell you is it's something that I've done back in. So I graduated in 2010. There was the recession and everything was extremely difficult to get any position. And I literally would just call around local CPA firms, anybody that, especially this time of year as everybody is preparing for just to get some sort of experience. And I know it is frustrating to hear. I feel you. And especially if you do not have any internships or anything like that. And then, as you get at least a little bit of experience, then you can apply, with at least that experience, or stay in that firm and keep learning. Quite frankly, smaller firms are phenomenal to learn at.
Mm-hmm. Yeah. And I would say too, when you're looking at job postings and they say you have to have experience, ignore that
Yeah.
for the entry level positions, because that's ridiculous. And they're not going to get the people with experience applying to those jobs. So just like,
Yeah.
this is something we tend to do is we underestimate ourselves.
Yep.
Don't apply for jobs even if you're not totally qualified.
Yeah. And
you
message me,
might be
Marta,
surprised.
also. I'm not sure where you're at, located, whatever it is, but shoot me a message, a DM on LinkedIn. I'll let me see what I can do.
And Shivani was just curious, we may have already answered this. Does the $2,000 that you charge include questions that the clients ask? How often do you do the check-ins with them? I mean, it's quarterly, right?
So yes, so that 2,000, that was a minimum fee for tax only prep. So minimum fee for any just tax return only.
Okay.
The quarterly starts at 1,500 a quarter, so 6,000 total for the year. At which point, I don't really care how many questions you ask me. So the quick answer is, for the 2,000 for the ones that are like just tax only, not really, because again, if you're looking at time, which I don't track, but if you're looking at time versus whatever, a couple questions here and there are not gonna make it.
You just build that in. It's built into your fee as people asking questions.
Exactly.
Yeah. Awesome. Hey, Yuri, thank you so much for joining me. Where should people connect with you online?
Yeah, LinkedIn is where I reside. I'm also on Instagram, the Fun CPA. But LinkedIn is where I kind of thrive and hang out most of the time, and maybe a bit too much to be quite honest, but that's all good. I do what I can.
This hour flew by, Yuri.
Yeah.
So many valuable insights. I really hope it helped out anyone who's thinking about going off on their own. Maybe it'll help them get set up right. I know it will.
I hope so.
Take on those right clients and right size their practice. And it's just so inspiring, your story. So thank you for sharing it with me and
Thanks,
our
man.
audience.
Thanks. And thanks for having me on the show.
Stay tuned for a brief message about how to earn continuing professional education for joining us today, or listening to this episode, or watching this recording. You can download the Earmark app and take care of all your CPE before the end of the year. It is completely free, so go sign up today. See you around, Yuri. Thanks.
See you later, man. Thanks for having me.
Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.